Hey guys, this is accountant Deja Mary here, and I'm so excited about today's video because in today's video, we are going to be talking about how to manage your business finances and taxes as a coach or consultant. So let me ask a question. How many of you guys watching this video right now are first gen business owners? And when I say first generation business owners, I mean you are the first person in your family to own and run a business. Or maybe even you're the first person in your family to manage a successful business. Go ahead and type a one in the chat bar below if you are the first person in your family to own, to manage a successful business that's on track to make six figures and beyond. First of all, I want to give you your flowers and say kudos to you because that is not an easy task, especially if you don't have role models, if you don't have people like actually in your family that you've been able to watch run a successful business and learn from. You've had to learn all of this on your own. You've had to go out and seek your own knowledge and information. You had to go out and learn about marketing and advertising and system management and automations and lead generation and having a sales conversation and getting a client a desired result. Like you had to learn all the things by yourself. So kudos to you. But how many of you know that when it comes to business finances and taxes, that's a whole nother beast, right? If you are not skilled in tax law, it could be really hard for you to understand what are your responsibilities as a business owner. What are your responsibilities when it comes to taxes as a coach or consultant? It's not information that's shared often. It's not information that's shared freely. You really have to do a lot of research, and then you're still trying to guess because you're not an accountant, right? You're not a taxpayer. You don't know where to start when it comes to taxes or keeping up with your bookkeeping. So that is why I'm so excited to come on and share this topic today, because I hope this information is helpful to someone that's like, okay, I'm making money in my business. Now what? How can I make sure that I'm paying close to $0 in taxes like these millionaires do? So if you've ever had that question, you're in the right place. Stay tuned because I'm going to share everything you need to know to manage your business finances and taxes as a coach or consultant. But before I do that, if you guys are new to me, I just want to say, hey, hi, and welcome. My name is Deja Merritt. I am an accountant and debt relief strategist, and I help multi-six-figure coaches and consultants to manage and maximize their taxes and bookkeeping, all the while paying close to $0 in taxes. So I'm going to go ahead and share my screen. I created a simple presentation for you, and I hope it's helpful in helping you understand how you should be managing your business finances moving forward. So let's see what we got here. All right, give me a thumbs up if you can see my screen. If you see what I see, go ahead and give me a one, give me a like, give me a love. Let me know you see what I see. And let me go ahead and put this in present mode. How to manage your business finances and taxes as a coach or consultant. So my purpose for you today is to make sure that you have increased cash flow. I want to make sure you're already making six figures in your business. You may already be making multiple six figures. I want to make sure that you can scale to that $1 million mark while paying close to $0 in federal taxes. I want you to be able to avoid tax penalties and late fees by staying compliant with the IRS. I want you to be able to budget for the future and have useful reports that's going to help you manage and grow your business each day, each month, and help you qualify for business capital. And then I want to save you hours during tax time with streamlined financial reports. So let's talk about creating a money system for your business. It's so important that you have a clear picture of your income and your outcome. You want to have a simple process to track your income and expenses, what's coming in and what's going out. Why? Because that's the only way you're going to know how profitable your business is. I tell you guys all the time, I have people that make six figures in their business, but when we look at their financial reports, they're profitable maybe a couple $1,000s. and you're wondering at the end of the year, like, I made all this money. Why don't I have anything to show for it? Why isn't this money in my bank account? Because you spent it and you don't know what you spent it on. So it's so important for you to be tracking your income and expenses on a regular basis. And the way that you're going to do that is through your record keeping. That is going to be your plan of action to succeed. So let's back up a little bit and talk about taxes as a coach or consultant, how you are taxed. So let's say, for instance, you made $100,000 in your business this year. Well, you're not just going to automatically be taxed on that $100,000, right? The IRS is gracious enough to say, hey, we know that you have to pay for business expenses to run and manage your business. So we're going to let you deduct those business expenses first, and then you're going to pay taxes on what's left, which is the profit. So you have your revenue, which is that $100,000. Let's say you have $50,000 in business expenses for the year. Well, your net income, which is your profit, is going to be $50,000, and that's what you pay taxes on. That's a really key point to remember. So let's talk about some bookkeeping basics. Bookkeeping is the process of tracking all of your company's financial transactions so you can see exactly where your business, where your money is going and where it's coming from. And you want to make sure that you know what tax deductions you'll be able to write off, and your bookkeeping will help you to keep track of those on a consistent basis. Let's talk about the difference between accounting and bookkeeping, because to the untrained eye, it may seem like the same thing, but it's not. In the simplest of terms, bookkeeping is responsible for the recording of financial transactions. Accounting is responsible for interpreting, classifying, analyzing, reporting, and summarizing your financial data. So some people ask me, like, when should I go out and get an accountant? You could go out and get an accountant as soon as you start, definitely as soon as you hit that six-figure mark, right? Because once you hit that six figures, now you're looking to scale to multi-six figures. You're looking to scale to that $1 million mark. And at this point, you have the data, right? You know how to make the money, you know how to bring it in, but you need to be able to analyze the back end transactions, right? You need to be able to analyze the KPIs, which is the key performance indicators that's making you money. You need to be able to look at your financial reports and estimate what you're going to make next month and the month after. You need to be able to estimate when you'll have dry months in business so that you can prepare for it, maybe put a little bit aside so that you aren't falling into the negative during those months or unable to pay some of your bills. You want to be able to read your financial reports, which an accountant or CFO can help you do that. And then again, going back to tracking those metrics, that's going to help you make and save more money. You know, if you're a coach or consultant and you have a lot of engagement on social media, maybe you don't have time to track those metrics. You don't have time to track, you know, how your content is, how people are receiving your content, right? For instance, let's just take that as an example. So say you're a coach or consultant and you're putting videos out there, you're putting content out there, and you want to see if people are interested in it, if they really care about what you're talking about. Why do you want to see this? Because you're spending time making this content, right? Time is money. So you may not have time to go into Facebook and look at your analytics and see which one of the topics are faring the best and what you should talk about more, right? You might not be able to go into MailChimp and pull your campaign reports to see how many people are opening your emails, how many people are clicking on your links. You may not have time to analyze those key factors that's going to help you make and save more money in your business, but they need to be analyzed, because that way you aren't just, you know, throwing darts at, you know, the wall, right? You want to actually have a bullseye. You want to actually have a target that you're aiming for. And the way that you do that is with help and support. If you're overwhelmed and you don't have the time to do it, that's when you want to bring an accountant and CFO on to help you classify, analyze, and interpret that information, because it's going to help you make and save more money. There are tons of, every single month when I'm working with clients, there are tons of times where I say, hey, this is $5,000 in missed tax deductions that you're leaving on the table simply because you aren't tracking them. Or, hey, these are, you have this $15,000 sitting here in accounts receivable because people are signing up for your membership program, but they aren't paying. right? Are these people still in a program? What is your policy for collecting those past due balances for clients that may fall past due? How are you going and you collecting that AR? So it's different things that an accountant can point out for you that's going to help you make more money. Your accountant should definitely be covering the cost that you're paying them and adding thousands of dollars to your revenue each year. So when you get to a point where you're making money in your business and you want to know how you can make even more money, how you can keep that consistent cash flow coming in, what metrics you need to be tracking to increase your income, that's when you want to go ahead and think about onboarding an accountant. But do it immediately. That way you don't fall into a trap of leaving tens and thousands of dollars on the table in missed deductions, in income, and missed payments simply because you don't have the time to look out for that stuff yourself. Make sense? I hope so. So let's talk about why bookkeeping matters. Bookkeeping matters because it helps you catch more tax deductions. It can help you get business funding. So I know, recently recently many people have been applying for EIDL, PPP funding, and they wanted to see your profit and loss statements, right? Well, if you're keeping track of your bookkeeping on a regular basis, that wasn't an issue, right? Either they wanted to see your Schedule C or your profit and loss statement. So if you're filing your business taxes on a consistent basis and you're keeping track of your bookkeeping, you'll have those reports ready to go. It's going to help you catch financial mistakes. So if anybody is double charging you for anything, if you have bloated expenses, maybe you have a software that you're using that's a duplicate software that you don't need anymore or that you haven't used in months, is going to help you catch stuff like that and save money in that way. And then it gives you a clear picture of where your money is going, which is the most important part. You have to know where your money is going. Like, you should be planning your money out, right? Every dollar should have a mission. You should know where your money is going. And if you don't, that is a sign that you need to get your bookkeeping in order right away. So let's talk about 5 easy steps to do that, to keep track of your taxes and your bookkeeping so you don't have to worry about it at the end of the year. Number 1, you want to open up a business bank account. Open you up a business bank account. All you need to do this is your EIN number and your articles of organization. But once you have those things, go ahead and look for a no fee or low cost bank account. So some bank accounts charge monthly maintenance fees. You can look for ones that have a $0 monthly maintenance fee or something that's affordable, like, $10 or less per month. But by you opening up this business bank account, now you can make all of your business transactions using your business bank card. Why is this important? Because you won't have expenses all over the place. If you're trying to pay for expenses with a credit card here, with your personal account here, with your business bank account here, that's going to create a mess for you come tax season. You want to make sure that you are filtering all of your income and expenses through that one account. So that means any income that comes in, I don't care where it's coming from, if it's coming from Square, PayPal, Cash App, Stripe, wherever your income is coming in, it should go into one central account, and then all of your expenses should be paid in that account. Step 2, you want to separate your business and personal expenses. Say it with me. No commingling funds. Did you say it with me? One more time. No commingling funds. Well, what is commingling funds, Deja? That is when you are using your personal account for business expenses and vice versa. You're using your business account for personal expenses. Don't do that, because first of all, the IRS does not like that. Second of all, you could be putting your LLC, the legal protection that you get from having a LLC, you could be putting that in jeopardy by commingling your funds. Because say, for instance, someone sues your business, right? Your business could not be profitable. Say you made that 6 figures, but it all went out in expenses. So if they sue you, they don't have much to get, right? Because you don't have much to give them. But if they see that you were using your personal credit card to take care of some of those expenses, now they can go after your personal assets, like any cars that's in your name, any homes that's in your name, any bank accounts that's in your name. They can levy those wages. So you're really messing up that LLC protection when you start commingling your funds. So you don't want to do that. If it's a situation where you need the funds and it's in your business account, go ahead and transfer the money over. So if I was at the grocery store, let's say, for instance, and, I just needed $200 from my business account. What I would do is I would transfer that $20 over. In the notes, I would put owner's pay because this is me paying myself, right? Transfer it over to my personal account, and then I would use my personal card to make that transaction. But you will not see Kroger's or Myers or, Glory Supermarket on my business bank account because that is not a business expense. Not unless you're attending an event and you're just picking up some snacks to bring to the event, right? Do not commingle your funds. That's the most important thing you want to remember. Try not to. It just makes your life easier and simple in the future. Step number 3, you want to figure out if you want to use cash or accrual accounting. Let's talk about the difference between the two. So as a coach or consultant, you may have a monthly membership program. So let's say your monthly membership program is $350 per month. So let's say you sign someone up and they're in a 12-month contract, right? So that means that that's going to be $4,200 roughly. Hopefully my math is on it today. But that's going to be $4,200 for the year. So if you were using a cash basis, you just closed a new client at $350 this month. Woohoo! So cash basis says you're going to count that $350 in your books for August. Now, accrual, you're counting money before it comes in, but because it's already booked out, you can count it on your books. Why can't I say that plural? I keep saying the singular. You can count it on your books. So for instance, that same client that signed up this month and they paid $350 this month, well, you just signed a new client and you brought in $4,200 worth of revenue for your company. It's going to come in over these next 12 months, but because they signed this contract, you just brought in an additional $4,200. So accrual basis says, hey, in the month of August, I just booked out $4,200. So that's the income that is going to show for the month of August. Y'all following me? So on a cash basis, you're only going to count what came in cash, what actually came in or went out in cash. So if $350 came in from that new client, woohoo, you still got a new client, right? Congratulations. That's the cash basis. Accrual says, hey, this month of August, I made $4,200 on this one client because they just signed this contract and they're going to pay me this in my membership program over the next 12 months. What questions do you guys have about cash versus accrual? Step 4, you want to choose a bookkeeping system. How are you going to be managing your business finances moving forward? Just your business bank account is not enough. I know a lot of coaches and consultants think that, oh, hey, I can just print out my bank statements and take them to my tax preparer. No, you cannot. If you find an experienced tax preparer, yeah, they may do this for you, right? Because they just want the extra sale. They just want the money. They might do it for you. But an experienced accountant or tax professional is going to charge you for bookkeeping because this is bookkeeping that you should have been doing regularly throughout the month, but you didn't. And now you want to bring those statements to us at the end of the year when we already got a bunch of people whose taxes we need to file. You're going to get charged a bookkeeping fee. So you want to figure out, and back to me saying that just print out your bank statements is not enough. No, if the IRS audits you, printing out your bank statements is not enough. You need to be able to classify those transactions and tell us, your accountant, where your money was spent. We want to know how much of that, say you had $10,000 in expenses. How much of that was spent on advertising and marketing? How much of that was spent on coaching for yourself? Like maybe you have a business coach. How much of that was spent on learning and development for you to sharpen your skills and be the best in your industry? How much of that was spent on rent if you have office space or home office expenses if you're working from home? Like, we need a breakdown of your income and expenses, and your bookkeeping system is going to help you keep track of that. So there are tons of softwares out there. I listed a few on this PowerPoint that you can check out yourself. Some of my favorites are Wave if you are just getting started and you don't want to pay like a monthly fee for bookkeeping. That's free of charge. You could use. What I don't like about Wave is you can't create rules like you can in QuickBooks. So it just makes the process of bookkeeping a little longer, but you could do it if you don't want to have the extra expense just yet. If you are a growing and scaling business, meaning you are one of our ideal clients, you're making multi six figures in your business, go ahead and use QuickBooks because that's going to be a better overall accounting system for you. You're going to do a lot more than just your bookkeeping in there. You're going to be able to pay your contractors by direct deposit or check. You're going to be able to send out those 1099s at the end of the year that's required by the IRS. You're going to be able to have them your contractors fill out a W-9 or your employees fill out a W-4 right through the software. You're going to be able to take pictures of your receipts and scan it right into the app and then go ahead and throw that receipt away so you don't have just a box full of receipts that you got to add up at the end of the year. QuickBooks will grow with you as your company grows, so it's definitely a system that I recommend if you're looking for a good accounting and bookkeeping software. Step 5 is to make it a habit. At minimum, you want to enter all of your transactions at least one time per week and make it fun. You can do it at your local Panera Bread, Starbucks, or on your couch while you're Netflix and chilling, right? While you're watching your favorite TV show, just go in and categorize those transactions because it makes it easier for you versus waiting to the end of the year to do it. Now you're doing on the spot and monthly bookkeeping versus after the fact bookkeeping. If you do after the fact bookkeeping, you're going to leave thousands of dollars on the table and miss deductions. But if you're doing it as you go, you can spot those opportunities quickly. I have every Monday, I hop on a Zoom call with a few of my girlfriends and we call it a Monday money meeting. And we go and we catch up on our bookkeeping. We look at our metrics to make sure that we're on track to hit our goals. We talk about different ways that we can improve our strategies or where we can increase our sales funnels to get more prospects and lead generation. Like we hop on this call for 1 hour every single week. That way we're consistent with it and we do it together to hold each other accountable because just trying to do it ourselves is tough, right? So if you have some business owner friends, go ahead and hop on a phone call with them. Go ahead and meet them at a Starbucks, meet them downstairs in your basement, right? It doesn't matter where you do it or who you do it with. Even if you do it alone, you just want to make sure that you make it a habit. That way you're not doing catch-up bookkeeping. You are keeping track of it as you go so that you can qualify for as many tax write-offs possible, right? Y'all following me so far? Let me know if you're doing this right now. If you already do a great job at keeping track of your business bookkeeping, your income and expenses. Let's talk about business taxes and some key terms because as a coach or consultant, like I was saying earlier, it's important to understand your federal, state, and local tax requirements. You don't just have federal tax requirements. You have to make sure that you're compliant with your state and local tax entities as well. This is going to make sure that you file your taxes accurately and that you make your payments on time, because if you don't, you'll get a steep penalty for making your payments late. The business structure you choose when starting a business will determine what taxes you'll pay and how you pay them. So we're going to talk really quick about some key terms just so that you're familiar with them. So I'm sure most of you are familiar with the EIN number, which is assigned to a business entity so that it can easily be identified by the Internal Revenue Service. A lot of times you'll also need this EIN number when you're applying for different funding opportunities and when you're opening a business bank account. So if you don't already have your EIN number, reach out to an accountant, reach out to myself, and we can make sure that you have this. Income tax. If you have earned income and you live in the U.S., you are going to pay income tax. Everybody's income tax rate is different. It just depends on how much income you have and what your filing status is, but you can expect to pay income tax as a coach or consultant. Self-employment tax. Because you work for yourself, you will owe self-employment tax. That is a tax consisting of Social Security and Medicare taxes, primarily for individuals who work for themselves like you. So if you are at a job, they would automatically take out these Social Security and Medicare taxes. Because you aren't, you are responsible for paying them yourself. So if you've ever heard anybody say it's a good rule of thumb to set aside 25% of your taxes, here's why they say that. because self-employment tax by itself is 15.2%, right? And then you got your income tax rate. At the lower income tax rate, the lowest income tax rate is 10%. So that's already right there, 25%, right? But if you're talking about you're making six figures, I was just talking to one of my clients earlier today, and she said she looked up her tax bracket. I think her and her husband are at about $120,000 worth of income. And she said that when she looked up her tax bracket, it was at about 22%. So imagine that 22 plus that 15, you're already at about 37% of taxes. So it's a good idea to get with an accountant to figure out how much you will owe in taxes on your multi six-figure income. Now, that number can go down with a ton of tax planning strategies or business expenses, but it's so important that you get with an accountant to figure out how you can best reduce that tax liability. Employment taxes. You're going to pay employment taxes if you have employees. Excise taxes. If you sell things like alcohol or tobacco, you may be responsible for excise taxes. Most coaches and consultants aren't. Property taxes. Some people, depending on what state they live in, have to pay property taxes on things like commercial real estate, vehicles, computer equipment, business assets. Let's talk about sales and use tax, because this varies per state, right? But if you are selling a product, you may be responsible for sales and use tax. A lot of times that sales and use tax is on things like clothing or products and things of that nature. As a cultural consultant, 9 times out of 10, you may not have to pay sales and use tax, but it just depends, right? Because some of you have digital products that you offer. Some of you do have other services outside of just your coaching and consulting. So you want to speak with an accountant to make sure that you aren't responsible for sales and use tax. And if you are, you want to make sure that you register with your state to make sure that you get those paid. And then last, but certainly not least, is your estimated tax payments. You must pay federal tax on income that is not subject to withholding. So in other words, if you make a profit of $1,000 or more in your business, you are responsible for paying estimated quarterly taxes. And what that means is that because you don't have an employer taking your taxes out as you go, you are the employer, right? So you have to take your own taxes out and submit it to the IRS on a quarterly basis. That's typically every 3 months. So if you just think January through March is 3 months, typically that next following month, the taxes is due April. So they're typically due in April, July, October, and then January of the next following year. So if you're unsure of how much in quarterly taxes you need to be paying and how much you need to submit to the IRS, and don't forget your state and local tax entities, you want to reach out to an accountant to see. How y'all doing so far? How y'all doing with my key terms? If you are a coach or consultant, these are some terms that you absolutely want to get familiar with, that you want to know like the back of your hand. And most importantly, you want to know if you're responsible for the tax and how much you have to pay. That way you don't get to the end of the year and have this huge tax liability because you weren't paying it as you go, right? So that was like the most complex thing we're going to talk about today, right? Let's get into some fun stuff. Let's talk about some record keeping tips for coaches and consultants. Good records will help you monitor the progress of your business. It's going to help you prepare your financial statements. It's going to help you identify sources of income. It's going to help you keep track of your deductible expenses. It's going to help you keep track of your bases and property as you start purchasing assets as a business owner. You need to keep track of your bases, right? It's going to help you prepare your tax returns and support the items that are reported on your tax returns. So for those of you that are self-employed and maybe you just tell your tax accountant that you have a business, but you don't give them any business income and expenses. Well, if you're ever audited, guess what? That tax preparer is not responsible for the huge tax liability and penalty that you're about to get. You are. So it's very important that if you have not been doing a good job keeping up with your expenses, if you have not been doing a good job keeping track of your bookkeeping, do it now. It's not too late, but you got to do it now, because what you don't want to do is, audits are random. So with so much fraud going on nowadays, you could be randomly picked for an audit. What do you think your tax preparer is gonna do? They're not gonna scramble to find these receipts to match the income or expenses that they put on your tax return. They're gonna say, no, you signed this engagement letter saying that this income and expenses that we reported, that it was true and accurate. So if it wasn't, then you shouldn't have signed it, and you shouldn't have allowed us to electronically file it. Again, you are responsible. So you want to make sure that you just do a good job keeping track of your bookkeeping throughout the year. It's not hard. You just got to learn how to do it and then do it, right? What kind of records should I keep, Deja? If you've been thinking this, I want you to keep everything, right? I want you to keep your gross receipts. I want you to keep your purchases. I want you to keep your expenses, definitely your travel and transportation. So if you're catching Lyfts or Uber for work, keep those receipts. If you're traveling out of the state, like I just went to a workshop in Houston, Texas, and it was a business workshop. So I was able to write off my flight, I was able to write off my hotel, and I was able to write off my meals for the day. You want to keep track of entertainment and gifts, payroll and personnel, contract, leases, other agreements, your licenses, your certificates, and your permits. And this is a big one, your tax returns. You don't know how many people I file their taxes and I say, hey, do you have a copy of last year's tax return? And they say, oh, let me reach out to the tax preparer that did them and get them. Well, guess what? It could be days before we actually get the copy of the tax return, because it's not their job to keep up with your taxes. After someone does your taxes, make sure that you get a copy of it. Make sure that you get a copy of it. Make sure that you look over it so you see what they put on your taxes. You never know what somebody could have made a mistake. They could have transposed the number. You never know what someone can put on your taxes. So you want to make sure that you're proactive and you're keeping these records on file. Go ahead and have them email you a copy of your tax return, print it out, and you scan it into the computer. But keep track of your documents, your EIN, your articles of organization. You are always going to need that, right? Your SID and PIN that you get after you create your LLC, you're going to have to refer back to that. Make sure that you're keeping track of these things. And if you're thinking like, where can I keep track of them? You can keep track of them in a Google Drive folder, which is all digital, right? And cloud-based. So you'll be able to access it from anywhere in the world. Or you can create, you can keep track of it. You can create a folder in your email. And if you're unsure of how to do this, I actually recorded a video not long ago on, 3 simple softwares that you can use for lead generation. You can also use this for record keeping as well, to keep track of your records. So go ahead and watch that video. It's on my page, and that'll show you how to create those folders either in your email or on Google Drive. Let's talk about what receipts you should keep track of, because you don't have to keep all of them. So if you got this little $10 receipt here, $12 receipt here, $15 gas receipt, you don't have to keep track of all of that stuff, right? But if the expense is over $75, you need records to prove the expense. So if you're using QuickBooks accounting software, they have an app, which is a record keeping app, or a receipt app, I'm sorry. So you'll be able to take a picture of the receipt and store it in QuickBooks and go ahead and throw the receipt away. This way the ink doesn't dry out on it, and you have a copy in case the IRS does audit you. You'll be able to print out a PDF copy of all of your receipts. You should keep every receipt and record for at least 3 years. And again, store them digitally if possible. Use a receipt app, use a Google Drive folder, use a G Suite folder. Whatever you have to do to keep track of it digitally, that's going to be the best way, because we're not keeping track of receipts in a shoebox no more. That was like elementary. We got to move up at least to middle school and high school by now, at least to middle school and high school. No shoe boxes of receipts, right? Go ahead and store these things digitally. Now let's talk about some invoices and payment solutions, because I know many of you guys use merchant accounts to accept payments in your coaching and consulting business. So maybe you're using Stripe, which is a really good software integration. Maybe you're using PayPal, maybe you're using Square, maybe you're using QuickBooks. Whatever you are using, again, make sure that all of that income is flowing into your business bank account. So when I say this, let's say, for instance, someone pays you through PayPal. So now you see in your PayPal wallet, you have a payment of $100. So let's say you're like, okay, I'm gonna leave that in there until Friday when I do my payroll. Don't do that. Because what will happen is that Zoom payment for $15 is going to come out, right? And it's going to come out of that $100, and now you at $85. That Acuity payment for your calendar system is going to come out, and now you at $65, right? And that's not showing the true and accurate income, because now when you transfer that $65 over to your bank account, it shows that you had a sale of $65 and not $100. So it doesn't show your true income. As soon as someone pays you, just go ahead and transfer it over. Transfer it over to the business bank account. You can leave it there. It can sit there until you're ready to do your payroll or whatever else you have to do with it. But make certain that you are transferring it from whatever merchant account you use right away. Bank reconciliations. Let's talk about that. What is bank reconciliations? Because back in the day, I don't know if you guys remember, but we used to have to do this by hand. Now they've made it simple enough for us to do it electronically. And all it is the process of matching the transactions on your bank statement to what you've recorded in QuickBooks. So QuickBooks is going to pull up those, they're going to pick up those transactions for you, but they're not always accurate. So they may see a transaction coming in from Acuity, and they may think Acuity is, I don't know, they may think Acuity is a restaurant when really is my calendar management system. And they may categorize it in meals and entertainment. But if you know that's not the right expense, you need to be changing that to, professional services or, office software. You need to be categorizing it so that it's correct. So reconciling your bank statements, just make sure that you match the transactions on your bank statement to what's in your accounting or bookkeeping software. It's going to help to pick up on any discrepancies between your records and the banks. And it's going to make sure that it's resolved in a timely fashion. It's also going to help you see what's cleared and what's not. So if you get checks on a regular basis, you want to make sure that those checks are clearing in the month that they're supposed to. That way you don't overspend, right? So some benefits is that all transactions get recorded in one place. Your financial statements are up to date. Again, like I was saying earlier, you can run your reports to show what's clear versus what's outstanding. You'll be ready for tax season, and you can easily identify where your money is going. So let's talk about some more fun stuff, some tax credits and tax planning. Y'all like that little dance I did? I get excited when you talk about tax credits and money, right? Tax credits and tax planning. So people think like the only way for you to reduce your tax liability is to write off a bunch of expenses. And that's far from the truth. You don't want to write off a bunch of expenses because let's say I want to buy a home, right? I want my income to look as high as possible. I was just talking to my cousin earlier today, and she was telling me that typically when they do your mortgage, they take your income and they times it by 2.5%, and then they deduct certain expenses, and then that's how much you qualify for, right? So you want your income to be as high as possible. So you don't want to just spend money just to spend money, if that makes sense. You don't want to just say, oh, I'm going to go out and buy this $1,000 printer because it's a tax write-off. I hear people say that all the time, like, oh, that's a tax write-off. Don't worry about it. And I'm like, okay, you may not have to pay taxes on it, but you still have to pay money to get it, right? You want to make sure that if you're buying business expenses, they actually have a purpose to make you money, right? You don't want to just spend money just for the heck of it because it's a tax write-off, because that's no benefit to you. And it actually reduces your it reduces your taxable income. So when you go apply for things like a home or a vehicle or capital funding for your business, right? Your income looks lower than it should. So let's talk about some tax credits that don't involve looking broke on paper, right? You can hire your children in your business. So if you have children that's of age, like I hire my children to do some home office cleaning, right? I hire my children to maybe hold the video while I do live videos, hold the camera while I do live videos. I hire my children to shred paper for me when they're up here in the office. I always got, something here and there for them to do, right? I hire my children just to do small tasks in my business. So by you hiring your children, you can pay them up to $12,000, and you can write that off on your taxes, right? So let's say you pay them $12,000 throughout the year. That's just $1,000 a month. So whatever they're doing in your business, right? It could be big, small, or in between, right? You're paying them at least $1,000 a month. You want to make sure that they have their own separate bank account that you're putting the money in, right? You want to make sure that you follow the rules for hiring somebody. So if you were to go hire an independent contractor, or if you were to go hire a W-2 employee in your business, you want to make sure that you do the same thing for your children that you would do for them. They have to sign an employment contract. They have to have that W-9 or that W-4 on form. You want to make sure that you hire them properly, right? And if you're unsure on how to do that, reach out to me and we can talk more about that. But let's say you pay them $12,000 for the year. Well, if they made $12,000 or under, they don't have to pay taxes on that income. And then you can reduce that $12,000 from your taxable income. So let's say, for instance, we said you made $100,000 last year, right? Let's say you have two children. I have two boys. They're 15 and 10. Well, I can deduct $24,000 from my income. So now instead of me paying taxes on $100,000, now I'm paying taxes on $76,000. So I'm going to save a heck of a lot of money on that $24,000. So say, for instance, we were saying that the self-employment tax is 15%. At the lowest rate, the income tax is 10%. So 25% on $24,000 is about $6,000. So I just easily saved myself $6,000 plus by hiring my children. Like, it matters, guys. It matters. It matters. And there are so many other tax deductions like that. So if you're a coach or consultant and you're unsure what you can write off in your business, what's a tax deduction in your business, I'm going to leave a link in the description of this video or in the comments for you to join our mailing list. And then I'm going to send you over a coaches and consultants tax checklist, because I want you to know what you can write off, right? Again, there are so many coaches and consultants that's leaving thousands of dollars on the table in missed deductions simply because they don't know what they can and can't write off. I don't want that to be you. Go ahead and download that coaches and consultants tax checklist so you at least have an idea of what you can write off, and then just flow from there, right? Mileage, you can write off 58 cents per mile. So let's say you drive typically $10,000. I'm always thinking about money, right? Let's say you drive 10,000 miles in your business per year. If you drive $10,000 in your business per year, 10,000 times 58 cents is about $5,800. So right there, you are already able to deduct $6,000 from hiring your children, another $5,800 from driving something that you have to do anyway, right? And it has to be driving for your business, right? We're not talking about just personal stuff. It has to be specifically for your business. So that could be running errands, that could be meeting a client, that could be meeting a prospect, that could be picking up supplies, whatever it is that you need to do in your business, right? We're already at a deduction of $11,800 from our taxable income. Another thing that you can do is think about changing your business entity election. So I know many of you are LLC or sole proprietors right now, but what you don't realize is that maybe if you're at that six-figure mark, definitely if you're at that multi-six-figure mark, it's time for you to consider some different business entity elections. They can save you upwards of $30K, if not way more, right? So let's talk about what that looks like. But before we move on, I just want you to see that changing your business entity election, tracking your mileage, and hire your children can be a tax savings of up to $47,000. So that means that $100,000 minus the 47, we still at about 53, and we have not even written off the business expenses yet. So if you got $50,000 worth of business expenses, now you only paying taxes on $3,000. We didn't even deduct your standard deduction, which either if you're single, head of household, married, we didn't deduct that. So now you have no tax liability at all. Now you're paying $0 in taxes and you're getting back a refund. So you see how easy it could be to pay close to $0 in taxes. You just got to know the strategy, right? You just got to have a strategy. to implement. So let's talk about that business entity election. So let's say you're a LLC coach or consultant. Right now, you file your taxes on a Schedule C. You make that $100,000 in income. You have $49,000 worth of business expenses. That leaves you a profit of $51,000. Well, you're going to pay self-employment taxes of about $7,800. And your tax liability is going to be that $12,056.50. Now, let's say you're like, okay, I didn't hit six figures. I'm at multi six figures. It's time to see what I can do to reduce my tax liability. I don't want to pay $7,800, in self-employment taxes plus income tax, right? What can I do to reduce my tax liability? Well, you can look into some options such as an S Corp or a C Corp. Let's talk about the S Corp today. So the S Corp is really flexible because it allows you to put yourself on payroll and deduct what you pay yourself. So as a LLC filing on a Schedule C, you cannot deduct what you pay yourself. Now, you can deduct what you pay your independent contractors, or you can deduct what you pay your employees, but you cannot deduct what you pay yourself. So let's say you're making $150,000 a year, but your salary is $75,000 of that, right? It has to be a reasonable salary for the work that you do. So you definitely have to look at what are other coaches and consultants making in your industry. But if it's comparable and it's a reasonable salary, you can deduct that $75,000 from your $150,000 worth of income, and now you're just paying taxes on $75,000. Let's go back to that $100,000. Let's say you're paying yourself, 60 of that. Now you just have to pay taxes on 40. And if we go back to the previous screen where we were paying the kids, right? Where we had this $47,000 worth of savings, now you add just $7,000 that you're paying taxes on, and it could all make sense. So as an S Corp, let's say you make that $100,000, you pay yourself a reasonable salary of $30,000, right? This is really, really moderate. I wanted to keep it low just so you can get an idea of how this works. Reasonable salary of $30,000. You still got those business expenses of $49,000, right? So now you're only paying taxes on your profit, which is $19,000. You're going to avoid that self-employment tax as an S corporation. So you aren't going to have to pay that 15.2% or 15.3% as a self-employed individual. You're going to avoid that by changing your business entity election to an S Corp. So now you're just responsible for the Social Security and Medicare taxes. Your taxable income is about $37,000 and your tax liability ends up being about $6,500. So you cut in half what you pay as an LLC sole proprietor when you change your business entity election to an S Corp. So if you are at that six-figure mark, if you are at that multi-six-figure mark, and you are trying to figure out how you can reduce your tax liability, how you can pay the least amount in taxes, go ahead and speak to us so that we can see if it's time to change your business entity election. So what questions do you guys have for me? Was this information helpful? I hope it at least gave you a foundation to your business taxes as a coach and consultant and what your responsibilities are. If you want to learn more information, go ahead and sign up for our email list. We send out helpful information for coaches and consultants every single week. And you're also going to get that coaches and consultants tax checklist so that you know what you can write off in your business, so that you have more tips and tricks on how you can manage your finances and bookkeeping moving forward, and so that you stay compliant with the IRS so you don't have a huge tax liability come the end of the year. I left some resources for you guys. So if you want this presentation, just let me know and I'll send it to you. I sent it over to my graphic designer to work it out and make it cute. I didn't want to wait for it to come back. So listen, you got it, fresh from the start, just with Deja that knows nothing about PowerPoint and presentations. I wasn't the person in school that did the presentations. I always handed that task off. I never wanted to do the presentations, right? So you got it live and uncut. But once he sends it over to me, which I'm sure I'll have it in 24 hours, I'll get it to you. So let me know if you want a copy of this presentation for your records. And then it'll also have these resources. I just wanted to give you some resources as you're growing your coaching and consulting business. QuickBooks Online is between $10 to $20 per month. HoneyBook is a CRM system that handles your client journey, and it also integrates with QuickBooks. You got G Suite if you want a professional email, hello@merrittax.com, right? Hello hello@𝙗𝙠𝙀.com. Whatever your business name is, if you want that professional email, you can use a G Suite for as low as $10 per month. Canva is free. You can easily create beautiful designs and documents for free. Bill.com is a bill tracker where you can send and approve vendor invoices. If you're looking for some payroll processing softwares that you can use that will save you a whole lot of money, or some payroll processing teams that you can partner with to save you money, you can check out Gusto, ADP, QuickPay, QuickBooks. And OnPay is another one that I just started recently using, and I really, really like it. So you can check out any of those, and those will run you anywhere from $30 a month to $50 a month. But depending on how many contractors or employees you have, is really, really, really affordable. 𝘚𝑪𝑎𝑑𝑜 is another automated workflow management system that I absolutely love. I'm trying to get all of my girlfriends on it. I'm like, listen, you can automate your entire process. Just go ahead and try it. And it's only $35 a month. If you need to create surveys, if you want feedback to consistently improve your process as you're working with clients, or you want to be able to show those testimonials on your website or in your content, go ahead and have them create a survey. And you can do that through Airtable. And then if you're looking for a calendar booking system so that you can stay organized in your schedule, right, you can use Calendly, which is Black owned, or you can use Acuity Scheduling. Oh, thank you so much for joining me. If you stayed to the end, you rock. I hope this was helpful for you. Let's stay connected. I left my social media handles. So if you want to get in contact with me and just learn more about our services and what we offer, you can check out our website, www.merrittax.com. You can send me an email at hello@merrittax.com. You can follow us on IG at instagram.com/merrittax. I'm going to leave a link in this video, in the description of this video, for you to book a quick call with me if you want to learn how you can manage and maximize your taxes and bookkeeping. But yeah, let me know what questions you guys have about this. I always get excited talking about business, finances, and taxes. And I get excited because I hope it's helpful to somebody somewhere. Until the next video, guys, be blessed.